Good morning, good morning. Hope everyone is well. Henry, can you hear me? Audio test, can anyone hear me? Hello? Okay. Good morning, Florine. Good morning, Sufyan. Good morning, Axel.
Hello, hello.
Henry, you're very faint, but I can hear you.
Person, can you hear me?
Yeah, I got you. I can hear you. Yeah, can you hear me? I can hear you. Can't hear you. I'm gonna go grab a water really quick, guys. I'll be right back. Henry, can you hear me? I heard you. You might have. I heard you for a quick second.
I get a thumb up or something in the chat if you're able to hear me. I'm not sure if my audio is connected. Okay, good, thank you. Are you all able to hear Carson's audio as well? His is not coming through for me. Might be on my end then. I'm going to disconnect and come right back. There we go.
Can you hear me?
Yeah, now I can.
Alrighty. Let's get this party started. Good morning, everyone. It is September 17th, Sunday morning where I am, but it might not be morning where you are. Hope all is well. Let's go ahead and get into it this week. Let's see what we have on the calendar. Tuesday, 8:30 a.m. We got some building permits, nothing crazy there. Wednesday, FOMC, so PM session should get a little volatile there. You got funds rates releasing, economic projections, the statement, and the press conference following. This tends to be at least an hour long with regards to heightened volatility. Thursday, 8:30, unemployment claims, manufacturing index, and 10 a.m. you have existing home sales. Friday, 9:45, you got two PMIs. Well, one's manufacturing PMI and one's just a services PMI. So really, obviously, the most volatility of the week will probably be around Wednesday. keep that on your slate. Don't try to, the weekly candle will look, you'll get a lot more data following this. On the after Wednesday's closure, the weekly candle probably will show its hand for Thursday and Friday. That's what I was trying to say. Any questions on news before we just go ahead and get into the charts? Seems like we're all good there. So I will jump us over to dollar. So nothing crazy last week. We might have gotten a sense of direction. Really only two things I'm looking at right now is clearly buy side liquidity, but I'm also noting this rejection block right here. And I like how we closed above it. So with that being said, I'm watching this throughout the week. I'm watching previous week's high. We do have a BISI right here. Not sure if we'll actually want to fill that before trading to this buy side liquidity. That's something to potentially think about. It's a little deeper. I think we'll probably just stay heavy. To me right now, it looks like we just stay heavy-handed, but if we do for whatever reason, kind of just stop at our tracks right here and go lower. There is this. But then you also have the equilibrium of this wick right here. And actually, I'm going to turn the 25% on as well. All right. So these are kind of the areas on the weekly that I'm looking at, right? Where the price wants to open up, come down to this level. Whether the price wants to open up, come down to this level. The price wants to just open up, come down to this level, right? And then the main idea is whatever that retracement is, right? Do we find a way to go into this high right here, right? Relative equal highs, even though this one was a breaker. Oops. Right, we got a high right there. Got a high right there. I think that that's where price wants to go. If for whatever reason we turn and go lower, it would be, delete some of this. So this is my scenario on if we just decide to stay, go higher, right? Either this level, or this previous week's high. If we decide to go lower, I would like to see these three levels be inverted. So if price comes there, it could be any form of that, right? These would all be wicks up higher into these levels. And then I would have to see what we do here, right? Because right now, as long as it just respects this BISI right in here at 104,400, I have to remain, somewhat heavy-handed to the upside on it. If we collapse it and invert it, then obviously that's a different story. you can see there's a tiny BISI right there. So I'm kind of watching out for that. Let me take this off. Daily, right? We already talked about this. Or I mentioned it on the midweek review. This down close candle into this BISI. Right? On the daily, it's a lot more clear. Push down into it, down closure, displaced higher, shifted structure in here, and now we have a BISI also in here. Right? So I'd be wanting price to deliver into here. I would want it to be sensitive to the 50% of this candle with regards to daily closure, which happens to be the 50% of that wick. Excuse me, I think, yeah, 50% of that wick. Right? So moral of the story on DXY going into this week, if we can remain on the, with regards to daily closure above here, I'd like to see us heavy-handed to the upside. Yes, we can go lower and fill the rest of this, but I like this order block. I would like to think that we keep the bottom half of this BISI open. I like how it just stayed above consequent encroachment, did not hang out long, did not even take a single low on the daily out, right? Every daily low held following a tap into the consequent encroachment. So to me, I like this staying heavy handed to the upside with a potential retracement either into the top half of this bullish order block where this BISI is, or the mean threshold of the order block where that 50% of that wick is on the weekly. So these are my two areas in which I would like to see price potentially retrace into before going higher. If for whatever reason we don't, we just stay heavy-handed. Like I said, 106 would be really my area in which I would kind of go back neutral and see what happens. For the most part, that's kind of my gist on dollar this week. Nothing too crazy. This does look pretty clear to me though, so I'm for the most part going to be watching really just this down closure candle on the daily and seeing if we can, as long as we keep daily closure above that level, I'd like to see this level up here 106 be taken. But that's about it for me. Does anyone have any questions before I pass it over to Henry? All right. I'll go over my trades later too.
Okay, so we got a bit more clarity on ES toward the end of the week. Let's take a look at the weekly chart first. So last week we were talking about these two ranges, this high and this low, showing where our premium is at, and then also after purging sell-side liquidity under this low. Okay. We talked about this run back up here from this low to this high, looking at this range where we were kind of seeing this initial reaction in discount, kind of giving us that neutral bias as we traded between this premium level and this discount level. Just remaining neutral as we traded in that range. Now on the daily chart, we've gotten a bit more clarity toward the end of the week as to what could potentially happen next. because price is only looking to do two things, right? It's trading to an inefficiency or it's trading toward where liquidity is resting, right? So here on Wednesday, I believe we covered this in the midweek review as well. We had this SMT between ES and NASDAQ. Right there, see how ES did not trade below this low, and the NASDAQ did here. And then NASDAQ remaining in the upper half of its range gave us that bit of a bullish bias going into Thursday, where we traded up higher right into this remaining city up here. ES, notice how ES went a bit higher with that bullish S&T trading up into the city, and NASDAQ just went up to find liquidity resting above this high, right? And then Friday's action took us right back down into the lows in the ES here. So here on Thursday's action, now we've traded down to the low of the city. On Thursday, we trade, or this week, excuse me. On Thursday, we trade all the way back up to the high, filling the remaining portion that was left open here, and then reaching up into the city and trading all the way back down, back into sell side liquidity right here. So now we've traded back to the low, back to the high, and back to the low. We're leaving this. We can anticipate it to, or expect it to act as a balanced price range as we trade out the low. And so now looking at what's the most likely draw to occur next, it's either going to be an inefficiency or liquidity. Right? So we have a whole bunch of lows resting down here. This low was closed on Friday. We still have these remaining daily lows, and we have this inefficiency resting below. And remember, this is one we were looking for prior, but you don't always get that immediate run, right? Because this is liquidity. This is price action to draw more traders in and establish more liquidity resting below the low, right? Moving down, as this starts moving higher, participants start entering long, and where are they placing their sell stop? Under an old low. Okay, and so now we're trading down, back down to that discount point that we had talked about before. But notice all of these times we traded into it, the nice reactions occurring there and not staying at a discount, and then we trade high. On Friday's action, we traded and closed right at it there. So this tells me, just with the sharpness of this displacement lower after trading back up to redeliver and rebalance, I would be looking for lows next, and that's in alignment with looking for DXY to trade higher as well, right? So that gives us a higher probability opportunity to trade lower and follow that inverse correlation between the dollar and the indices. Okay, so we'll just be looking for these lows and this inefficiency resting down here. We also have this little volume imbalance here. If we get a bit more heavy-handed, trading through there, down into the volume balance, and then looking at monthly, we have that high of the BISI right there. So I'm going to take that down to the daily. That's an area we could revisit again. Trading to here, we trade below this BISI in the volume balance. We can revisit that up for. On the other side of things, if we do trade a bit back higher, now that we've traded back through the high and back out the low, I'm expecting this to act as a balanced price range. So I wouldn't really want to see price trade or at least close any higher than the midpoint of this BISI right here, if it is going to trade lower. If we start trading back up into there, that puts us back kind of in that neutral zone as to whether we're going to reach back for these highs or just trade back into and reclaim some of these inefficiencies right here before trading back lower. So if we do get back up into this range, the upper portion of this larger BISI, I would shift back to a neutral bias for the moment. As long as we stay in this lower portion of the BISI, then I would expect these lows to trade and this inefficiency down. Any questions there?
That works. You want to go over your trade this week, or do you want me to do mine first? Doesn't matter. If you're already on the screen, you can go over yours.
And hop into mine. So in a moment, any questions on ES there before we hop over into trades? All right, I'll go into trades then. So let me grab the exercise from last week. Oh, a couple of things in the chat. Oh, awesome. So the exercise from this past week was to trade your personal model, any time frame, any way you like, just to show how you manage a trade and what your style is in the trade. And the only real requirements were to trade on Wednesday, Thursday, or Friday after bread folder news release. So we're not getting ahead of the news. And then if you are currently in profit on your account, risking 0.5%, and if you're currently in drawdown, risking 0.25%. If you win that trade, you stop. Or if you go break even or lose that first trade, then you can risk a 0.25% on your second trade. And so here's the trade that I took for this week. Executions. I'm currently in a bit of a drawdown. I was down about 1.33% going into last week because I had a bit of a series of losses here. This was that break-even trade from the task 4, I believe it was. And then here was some trade from this week, where these are all partials. But I was able to recover a good portion of my drawdown. So you can see how even after a series of trades, it only takes one trade with reasonable risk, no need to over leverage or anything, and you can start working your way back out of drawdown. So now it's just a little bit over 0.4% in drawdown, so not bad at all. Here is the trade idea. We had a stop run under the midnight opening price right here. So running under this low, under the midnight open, during London close between 10 and 11 a.m. So here's 10 and here's 11. That's when this is occurring there. So during that London close is when you can potentially expect reversals if it isn't currently moving in the direction of your higher time frame highs. So I was bullish still, and this is moving lower since the open, right? And I'm expecting it to move higher. So I'm looking inside of this time frame for a potential reversal to occur to trade back higher. And the model I traded is a 2022 model. So that's going to be your purge of liquidity. Purge of liquidity, shift in market structure, and then a return to some gap before trading higher. Right? So you have a purge under the low. You have a shift in market structure, trading above a low high. And then you have some inefficiency remaining to trade back into. That's where you would enter your position with a stop loss under the inefficiency or under the low to trade higher. So that's the model that I traded here. Something to note here as well is we had an S&T between ES and NASDAQ. That's why I chose to trade ES on this position. Because if you look at the lows here, NASDAQ was trading under its low from 830, and ES failed to merge that right as it traded into this. What's going on our order block right there. Okay. So we have this downward candle. Changing the state of derivatives, we trade back through the opening price, utilizing the mean threshold of it right here, trading back higher, and then tapping down into it again before finishing this price run up into these areas, which I was targeting up here, which are on the daily this volume imbalance and this city. Okay. So I was using the volume imbalance as my terminus on this trade. And then okay, so we got the purge in liquidity under this low right here, tapping into that 1 hour order block, higher time frame point of interest again, and then the SMT with NASDAQ. Here we have the shift in market structure trading through this high, and then returning into this BISI, which was left right here. There's also a breaker right here with the low, high, lower low, trading through, and we have the breaker, which is your highest up close candle right here, highest bottom. So to try that out, you can see we just trade inside of there and don't drop down in here. That's why I was fine putting my stop loss under this candle and not under this one. I was expecting this one to not trade. And so I'm entering here, stop loss under here, only risking, I risked 0.2%. I had 0.25, but just the way that pricing worked out as 0.2% there. And then taking my first partial as we go into the 8:30 open. And then looking for this volume imbalance to trade through, closes above right here, reaches into the rejection block. I take my second partial right there. Here we invert the volume imbalance, we trade higher above this high. I'm taking lots of partials along the way to work on what I say here. Taking partials along the way is always a help to reduce emotions as the trade conditions. As the trade, oh, I messed up there. But anyway, I was saying it helps to reduce emotions as the trade continues to run further away from the entry. And I'm working to mitigate emotions along the trade as well as maintaining the loss, right? Like especially if I'm in drawdown, like I was on this trade, it's not going to make sense for me to try and take an entry here and hold it all the way up to these highs. If I held everything all the way up to these highs, then I would no longer be in drawdown. But this would be extremely challenging to buy here and hold this all the way up to here with no partials, considering that what are you likely feeling at this point if you're in drawdown? You're like, I want to find my way out of drawdown. And the responsible thing to do is to take partials and work your way out of that, right? Because what if this trades all the way up to here and I take no partials along the way and it doesn't reach this high and it reverses and comes back to my entry, break even, or yeah, it stops now and I have another loss. That's going to push you, and it would put me into a dangerous position as well emotionally, because I'm in this nice trade and then it comes back and I don't get anything out of it. And I'm going to be thinking, well, I should have done this, I should have done this. Instead, the best thing to do is take partials along the way. So I'm noting all of these points where it makes sense to take partial above all highs and at projection blocks, taking partials along the way, and then finally reaching up into my terminus right here. And the one last thing to note on this is after I took this trade, my entry right here, stop was right here. It said stop is not trailed beyond break even until my fifth partial was taken at the highs. So I'm acknowledging this as a market maker pie model. Right? We have the original consolidation up here, trading down, creating the low, smart money reversal here at the lows, purging that low, shift the market structure, trading back in. And then we have an accumulation, a reaccumulation, and then distributing up to the highs. So I'm allowing that to fully play out. And so until I take 1, 2, 3, 4, 5, until I took this partial and the highs of the consolidation were purged, I'm not moving my stop loss at all. I put it up to break even after the 8:30 price was trading through. So I moved it from here to here. But until this occurred, I didn't trail it up at all. Because I'm just focusing on the price action rather than moving my stop and not wanting to push it in too close where I don't allow this to fall out. I think it's a hands. Yeah, go ahead. See, please.
Hey, what's up, guys? Good morning.
Morning.
All right. So I just wanted to quickly just tap on the stop loss that you put. You put
Mhm.
it right above that second BISI on the market structure shift. And I wanted to know just the level of confidence, how you just felt that it's right, just right below, or where you put that stop loss. It could have easily purged it.
Sorry
You
about
just explain your, I guess, your confidence there of just putting it right there, the stop loss.
So this just comes through kind of seeing this type of thing play out multiple times. And and you start to see what happens through time in the charts and seeing how price trades. But my expectation here was that since sell side had already been purged right here, and then just given the time frame that this is occurring as well. Like, so we're now between 10 and 11 on the London lows. We're likely going to make this run back toward highs going into the lunch hour, which there we end up pressing a little bit higher going into the lunch hour, but we're going to consolidate through there. So I wanted to see this trade back through the highs before the lunch hour. So there's only about 1.5 hours to do that. So it needs to start moving on its way. And then here, 10:30, right here, right, going into 10:30 is when we're making that low. So I'm expecting this to get moving. I don't want it to come down here anyway and start hanging out down here, because if it does, then it could potentially be trading back through the relative equal lows that were left, even though we had that S&P with NASDAQ. And then I'm also looking at this as a breaker. And so we had the low, the high, the lower low, and then trading through it here. We're getting that closure above it right here. So now I don't really want to see price trade back under it. If it had a little wick under it, that's okay, because my stop is still placed down here. But at this point, I'm expecting this to act as a breakaway gap, because we had two gaps form right here. We have the breaker, and the breaker is sitting above and in confluence with this BISI right here instead of this one. So now I'm anticipating this to be a breakaway gap, and I don't want to see it trade down into there. But um, if it did and stopped me out, and it just wicked down through here and then came back right back up into this range, I could look for a potential re-entry still inside of this breaker. Right? Like if it wicked down here, trades back up, we have a down close candle form, let's say, and we trade back above here. As this taps back into the breaker, I could take another entry there with the stop loss under the low, as long as the uh, as price is forming, it's still showing me that this is likely to occur. I was just confident in the fact that it's going to trade into the lower one, because I'm expecting it to be that breakaway gap because of the alignment with the breaker and the BISI in the same place, and also just the timing in which it occurred. I didn't want this to make another low back all the way down into here, because then that's potentially leaning toward the fact that this wants to dig a bit lower, and it's not going to make this run.
Yeah, thanks for that. Sometimes I battle with that, battle with where to put my stop loss, where I feel the most confident. And when I look at two like BISIs like that, sometimes I'm really conflicted of where I should put it. But you bring a great analysis stating that if it just wicks down, just stops you out, and if it goes back into the area where you, I guess, initially re-entered, and if it confirms it, just re-enter again. But the issue then
Yeah,
is just the emotion involved. It's like,
yeah,
ah, man, I already got stopped out. I don't want to do it again. I already played with the fire. But I think also as a trader is just numbing that out over a period of time. So
yeah. It just
thank you
takes
for that.
time to learn, and just trying to stay objective about the price action too. Like if this reaches down and wicks down and stops out, and then price starts closing down inside this BISI, I'm going to be a little bit more hesitant to re-enter it, even if it trades up into this area. But if it were to just wick down, come back up, close inside, maybe above the consequent encroachment of this BISI right here, and then start making that move higher, it'd still be in alignment with the trade idea, even though it wicked down into here, because that would just be manipulation and reaching for potential stops before moving back up higher. I will say too, though, that it's not necessary to put a stop like this. I would like if the price action had developed a little bit differently. Let's say it traded up into the 830 open and then was consolidating, and there were 3 BISIs remaining, for example, and the breaker was still down here. If we had another BISI form in here and it traded above and then back down to that one, I would likely still put my stop under this one and not under the first one to form, because I'd be allowing it to trade back into the breaker as well. So it just comes down to kind of seeing the price action unfold over and over again, and then understanding what would occur within a certain time frame. But you don't need a stop like this either. So that'd be totally fine to put your stop down here if that's more comfortable. You just need to size your position differently. So risking 2% of the account, or not 2%, 0.2%. This is a very tight stop. It was only 1 3/4 a point. So I was trading micros and I was able to take 20 micros on this trade, which gave me lots of opportunity for partials. If the stop were down here instead, that would be totally fine. It would just be a difference in the position sizing, right? So it's about 2 or 3 times the stop loss. So I'd have to cut the position down to a half or a third of what it was before. And that's totally fine. If that's more comfortable for you, then put the stop loss there and just size your position appropriately. Good question.
Thanks for sharing.
I see your hand.
Sorry about that. I had to get off mute. Great trade, Henry. Question for you. I think you answered this, but I just want to make sure that I kind of got it. Your mindset before this trade was your mindset that you just wanted to get out of drawdown or do your best to get out of drawdown, as opposed to saying, I want to get positive? I mean, is that where your mind was? Forget getting above the 100 grand, but just get back to the 100 grand?
Yeah, I didn't even when I'm working at a drawdown, I don't even like to focus on getting back to a specific number. My focus is more just on let me do all the right things to take a good trade and be responsible in the trade. If I'm focused on the number, if I really wanted to see this get back to 100, then I wouldn't be trading it the same way, and I wouldn't be following the rules and the procedures that I know are the right thing to do for longevity in trading, right? And that's going to be taking partials and allowing the trade to play out as it was. I would probably be more frightened at each of these little retracements that price is going to drop back lower if I wasn't taking these partials along the way. By this point, I already had, let's see, 5 there, 5, 3. So I was already at a 3/4 of my position by this point. And so at this point, if it started to drop back down, giving me actual signs that it wasn't going to complete this model, then I would trail my stop up and I'd get cut out in the black on this position, which is fine. But if I hadn't taken any partials on the way, I'd be so nervous about what was potentially unfolding here. But yeah, just as I'm working out of drawdown, I'm not concerned with getting back to in profit. I'm just concerned about taking a good trade and understanding that as I take the good trades and follow the rule sets that I built for myself, it's going to naturally work its way out. So there's no need to rush it and jump for a specific number, because at least for me personally, that's going to affect the way that I'm trading, and I don't want that to have an influence. It's just like the same thing with it's a good idea when you're trading to not watch your profit and loss, right? So you'll see a lot of people put well, I think, oh yeah, when you enter a trade on TradingView, it shows like your ticks or your profit and loss. A lot of people switch it to ticks, or there might even be a way for you to turn it off entirely. you know, seeing how far your trade is progressing, because that can be something that influences you emotionally, right? If you're in this trade and you see that it's up 500 or $1,000 or something like that, and you see, oh, I want to take that. It's a distraction. You're seeing the number and you're making decisions based off the number rather than off of what price action it's doing. So everything that's occurring in here is just telling me this is respecting down course candles. It's trading higher. It's respecting these inefficiencies, trading higher, trading higher, trading higher, consolidating, and then continuing to expand higher. It's a market maker buy model. I'm expecting it to trade to this high. There's no reason for me to not allow it to play out. But if I'm just following the numbers, if I'm just focused on mitigating my entire drawdown, then I'm going to be influenced by other things. Whereas if I'm just focused on, let me take a good trade, I'm not concerned about the drawdown, it's going to be at least partially mitigated here, then I'm going to allow that trade to play out. I'm going to take partials along the way, and then we'll work out of it slowly. So I was down here last week, I think I was at, or it says right here, I was at 98,672.50, and now I'm back up to 99,568. So only a little bit over 0.4 in drawdown, or 0.45. So this trade, risking 0.2%, was able to gain 0.9% on the account. So one trade more could easily put this out of drawdown. ICT talks about it too. This is a good thing to do when you're in drawdown. Make a drawdown recovery plan for yourself, and don't expect it to happen right away. Extend it out over time to give yourself time to work out of that drawdown. And it's a great thing to journal about too, because then you're telling yourself and you're putting a concrete plan out there for, I'm going to take time to mitigate this. I'm not going to rush it. I'm not going to try to get right back into a positive. I'm going to take time to mitigate this drawdown. So we talked about, like, if you were down, let's say the account was down 3%. So down $3,000. I could say, all right, I'm going to take 4 weeks to try and mitigate this drawdown. I'm not going to try and do it in one trade or 2 trades. I'm going to take 4 weeks to do it. And then I can break that down and say, or let's just say 4%, just for the ease of math. I'm going to take 4 weeks to do it. So that means I need to, in order to reach that recovery plan, only work on mitigating 1% per week. How am I going to do that? Okay, well, if I take 2 trades in a week, then I just need to make 0.5% on each trade. So if I'm going to hit a 2-to-1 trade, let's say, then I only need to risk 0.25% on a trade. And then you could have 2 0.25% trades, make 0.5% on each, and you get to your 1% for the week, and then you stop for the week. So you're slowly working at it, and you're building a plan for yourself so that you don't have to feel emotional about, I need to get this back right away. I need to work faster for this. No, you have a plan for, I'm going to recover this over this period of time, and I'm not rushing it. And it will help you to focus on just taking the good trade, still doing the right things, and slowly working your way out rather than trying to push it and make emotional and poor decisions that will likely lead to more drawdown or more emotional scars. Great question.
Thank you.
Pablo, go ahead.
Hey guys, hello. So looking at your entry, I see that's a unicorn, but let's say that the order block, it wasn't there, and you have several fair value gaps to choose from. I'm wondering, would you choose the one that is closer to the price at that moment? Do you use OTE? What would be your strategy in there?
If the breaker wasn't here?
Yeah.
So if this low traded and this low traded higher than that, and then, well, I think NASDAQ might be good. Did that? Or no, NASDAQ did it too.
I mean, sometimes the order block does not align with the fair value gap, so
exactly.
you don't always get a unicorn, right?
The higher probability one is going to be where it does align.
Yeah.
If this traded higher, for example, and created that third BISI I was kind of making an example of before, if this traded higher and created another BISI right here and traded back down into that one, I would either take it to be involved in the trade and allow a wider stop loss still under the breaker, or I would wait, not take it at all, and either it trades down into here and I get my entry, or it trades away and it's no trade. So that's an important thing to focus on in this week too, is we're all focusing on what is our favorite model to trade. And the reason in looking at the task that way is we're identifying the model that stands out to us the most, and we're focusing on outlining it. What are our rules for it? What time frame are we trading it on? What do we need a higher time frame bias with it? All these sorts of things, so that you start to see, is what's occurring right now actually my model, or am I forcing it to align with my model? And if you aren't seeing what your actual model is, then there's not a trade in place for you. So like, let's say this traded all the way up to here and left a whole bunch of BISIs right here and then just traded a little bit. I would have to accept that that's not the trading model I'm trying to trade and not take a trade. Or if I had a different trading model that I was confident in, then I could potentially take that trade. But yeah, if this just made another BISI here, for example, and then traded into that one, not down in here, I could take an initial entry with a wider stop loss and just size it appropriately to still only allow for that 0.25%. Does that answer your question?
Yes. Thank you very much.
Okay, good. Any last questions? Otherwise, I'm going to pass it to Carson to go over his, and then we have some submissions to go over as well.
All good, all good.
All good, okay. Okay.
Good stuff, good
Great
stuff, good
questions.
stuff.
Oh, Axel, did we take the same trade?
Alrighty. Can you guys share or see my screen?
Yeah, you're all good.
All right. So my trade was on Wednesday. First trade was a little after 9:30 open, 9:43 a.m. Breaker BISI model, obviously just my go-to. The only thing that wasn't as clear this go around was just the draw on liquidity and the opposing liquidity that's already been taken. Right, that's where your probabilities really increase. It's not just the breaker and the BISI, but it's the draw on liquidity. How clear is that, and also what's the opposing liquidity look like? Right, has that already been taken? So, breaker in here, low, high, take out the low. So that's to me opposing liquidity. Imbalance, BISI right here. You can see the respective consequent encroachment. We go high. Great, love it. In there, we get our breaker, highest opposed candle in between the initial low and high. It takes out the low that then displaces and immediately trades through the high. There's a BISI in here. So when price comes into this level, I'm a buyer, right? You can see exactly where where I'm pressing that button, right? These are, I'm big on market execution, so I market execute these. So I bought when price initially came in here, stops at this low, right? It's outside this breaker. And if you notice right here, there's a relative equal low set. Price trades through it and then displaces. So stop initially goes here. I'll make this red. Stop goes there. Price trades, doesn't break structure or do anything, and goes lower. Now, when price traded up into this level, stop stayed here, right? We came back down, we revisited this area. I endure a little bit of drawdown, a little bit of heat, whatever you want to call it. Price then trades up through it. When it does it this time, and we delivered above this high, I had a couple things looking for me, right? I had a SIBI that was now potentially inverted. I had a BISI in here, and I had a BISI in here, right? That's 3 PD arrays that I could use in my favor. And if they didn't play out, I would have been screwed. So what I did is once we took out this high, I moved my stop to this low, right? You can see that's where I got taken out, right here. That I was able to mitigate half my risk. So what was originally risked at 0.5% was now risked at 0.25%. So what would have been a 0.5% loss was now a 0.25% loss, right? So I lose, price comes all the way down, revisits. We have a SIBI right here, right? Revisits that SIBI after it's already been inverted a couple times. We come back, we revisit, and we go higher. But now, as a trader, the liquidity is not necessarily clear, right? You have the initial draw on liquidity in the form of buy side, but now you have a relative equal low set on sell side. But in the moment, on Wednesday, I was relatively bullish on ES, because if you go to the daily, we had just swept through some daily lows, and we also were coming off of this BISI low. So there was things on the higher time frame coming off this BISI low that I saw price potentially wanting to push higher. We also had relative equal highs right here, right? So that's overall my main draw on liquidity with the idea that price took liquidity down here, right? Those relative equal lows got taken by this spike in liquidity. But I'll delete this one. So price wasn't having it though, right? I'll take this trade 9 out of 10 times. Price wasn't having it. Comes down, creates sell side liquidity. I got a submission this week, and someone took this exact same trade as me, not the buy, but the sell. So I then also was going to use this same thing, but inverted, with the idea that we take sell side. But I only risked half of what I had initially risked before. I only traded with one contract, and I made sure I only used 0.25%. And you can see right here, I waited for price to see how we reacted. We were able, off the initial 2 candles with regards to closure, if you were to break this breaker in half, the top half was respected. We go lower. I entered in on the 3rd candle. Did not have a good entry at all, right? Not a good entry. And I got taken out, right? Where's my overall stop loss here? It's right here, right? So I've got 0.25% knocked out right here. I've got 0.25% knocked out right here. So I'm down 0.5%. So as I'm sitting here and I get stopped out, I'm waiting to see how these candles trade. I flip back out to a couple higher time frames, see what they look like, and understand what could potentially be the next draw in between these two, right? And on higher time frames, this and this looked very balanced to me. So I did not see price returning to these levels. I thought that we were going to be more probable going higher with regards to these highs in here. So with 0.25%, since I'm already down 0.5%, I can only go in with 0.25%. With 0.25%, I go in, with the idea that this order block holds. I go in right here, and I go into the buy side, which gives me enough to clear my drawdown. So if you look at this, I finally have some red on the screen, right? First trade 250 here. Lost 250 on this, initial buy, lost 250 on the inversion, sell, covered it all back up. This was, I was accidentally marking, you can see, you're probably like, what's that trade right there? I was accidentally marking up charts and forgot to log out of it. Hotkeyed in a live trade one night when I was marking up charts. So, but I still even took that into account and I mitigated that too. So overall 3 trades. Finally got some red under my belt. Not gonna lie, it kind of felt good. I don't like, and you'll learn to not necessarily like. It's not healthy to sit here and have all these winning trades. You need drawdown is healthy for you. It's good for the ego. Keeps the ego quiet. So yeah, I mean nothing too crazy. I didn't try to stretch for anything else. I didn't try to go and get, I'm already in profit. I don't need to try to go and get more profit. All I need to do is, like Henry said, right? First things first is just mitigating losses. Trying to do the best thing you can do, make the right rules, right? I stayed within my risk levels throughout the entire time. I could, if you also look a little bit closer in here, another reason why I was a little bit lenient towards buying was there also is another BISI right here, right? So it started to look a little bit more clear once we had made these 2 wicks in this BISI and did not close above or below the consequent encroachment. I was able to get in there. But yeah, no, I mean, nothing too crazy. It was more, yeah, I traded this September contract just because this was still on Wednesday. I switched over on probably Thursday or Friday. I can't remember to start watching them, but this was my only trade, and I was still the contract rollover was technically Friday. I like to switch them if anything a day before, but 2 days before it's just hit or miss. You can trade them. You can trade the new one. You know, I mean, it's just it was 2 days before the rollover. Some people like to already have been switched over. To me, I was just still trading ESU. But there was no rhyme or reason or specialty to it. But yeah, right. I think the biggest thing on my trade is not shooting for any more, right? Just keeping it at bay, knowing that you took 2 losses, get that drawdown and heat in your system, and know that I wasn't risking any more, any less on this trade than I should have been, right? I lost 0.25%. I lost 0.25%. Within 2 trades. I had a maximum of 3 trades. I can only obviously risk 1 more trade at 0.25%. Yeah, that's basically it. Any other questions before we go into the other ones? All good there? All right. Going into the next trades. All right, week 5 results. It's crazy that it's already been 5 weeks since we started doing these trading exercises. It feels like yesterday. All right, we'll go ahead and get right into it. Using the 1 setup for life. There you go. That's a new one. Using a 1 setup for a life model and the 130 Judas as framework, we swept Tuesday's PM session. Buy side liquidity and rejected it off the hourly bearish order block. I went short at 14.11 and the unicorn targeting lunch lows with a stop above the bearish order block mean threshold and inverted fair value gap. consequent encroachment. Because I was using only one contract and we were having deep retracements, I talked myself out of the trade early, wasn't happy with my exit. Maybe a better idea to use 10 micros so I can take partials and leave runners. I think that's a great idea. But looking inside of it, and just looking here, I think you have a great trade, right? Clean breaker, clean civvy and the breaker, very good entry, right? You let it deliver, saw candle closure, entered on the next candle. I love it. Price delivers lower, gives you something to believe in, and then you know, it's very sensitive to that civvy going back in, right? And you can see that you're watching that, right? And you're watching the candle closure. You can note the candle closure in those bissies, or excuse me, civvies. And I don't think your entry was that bad at all, right? You don't have to get all of it. You got half of it, which is great, right? And you were able to take the most low-hanging fruit, right? This was the least resistance right here in these lows, and then you have this bissy, right? I don't think there's anything wrong with that exit. I think, you know, like you said, your exit was great with what you were given. Now, if you had 10 micros on, yeah, you could have taken a couple different partials. That's why you always got next week, right? So I think this is a great trade. I think it's one of the best trades we got all week, and you can notice what one good trade does for you, right? Look at what one good trade does for you. And that's not to say that you always have to make it all back, but the patience, right? You didn't start too hot going into everything, but it took one good trade to bring you almost. In Henry's case, right? Both you and Henry had good weeks this week. You don't have to get you don't have to, like they were talking about earlier, you don't have to fight for that account balance to be at $100,000, right? You don't have to get it back there all in one time, right? So I think that's a great trade. I love it. Henry, do you want to do the next one?
You go ahead, keep running with them. Just
Okay.
prepare my commentary if I have something.
Okay. So alrighty, we've got pre-trade analysis. I see that there is a bearish breaker that formed, waiting for post 130 price action to identify the timing to trade. During the trade, I noticed that price slightly broke below the breaker. However, still kept in the breaker range. I waited and found that price has reached the inverse breaker block and closed above. I waited for price to touch the top of the breaker block and entered along with one contract, shooting for 4 to 5 handles. So I'm assuming you're looking at this as we've got the New York lunch low, you're in some higher time frame. Liquidity, you've got New York lunch highs, relative equal highs. And then it looks like you waited for price to trade in and around this area. Kind of traded through, passed through, consolidated, and then you waited for kind of just, I guess, clear displacement. Once price traded outside of that area with closure, you got in on this retest, right? This last visit, test of this down closure in here. And price trades higher into the buy side. And that's where you were sold. Yeah, it looks good to me. My only question is, I'm curious where next time I would identify, like if this is if you're identifying this as the breaker, I'm just not sure what you're identifying the bearish breaker as. So that'd be something that next time I would like to note, you know, what are you looking at? What specific candle are you looking at for that bearish breaker? So I know, because this to me is not a bearish breaker, right? If anything, this to me is an order block. So if you're utilizing this as a breaker, a bearish breaker, I don't really see that as that, right? You have to have a high, a low, right? You have a high, a low, take out the high, but you really need like immediate displacement lower. And on a bearish breaker, you're wanting lower pricing. You know, you would utilize it as kind of like a lower pricing model. And obviously price went higher. You can use it as inversions, but I wouldn't necessarily use this as a breaker, but it could be used as an order block. I mean, if it's the way you see it, that's fine. But I think that you would have needed price to. It's too far out there. Like if you look at, I don't know what this is, a 1 minute. It happens too long. It's gotta be kind of condensed in the sense of when price makes the high, makes the low, takes out the high, and then takes out the low. The key word is immediately. You almost want immediate price action to take it out. But overall, you're on the right side of the market. It looks like, right? You bought in here, you sold in here. Would really like to see the executions next time too, rather than just the labels, right? Just as much transparency as possible, so we can go back and you know, the more information, the better, right? Don't hold back. Don't be shy. And I think your idea though is right, right? The draw on liquidity is right. The direction in which you were seeking price was correct. So
I think this works as the bearish breaker too, because they're saying right here they use it as the inverse breaker, but
oh, you're right.
you do have your high, low, high here, and then at this point you get that run below the low, and then trading back above right here. So I see how you're using this as the inversion. If you were trading just off a normal breaker, then you have this here as well. Right?
Yeah, that's what I was really looking.
Yeah, but no, that's good use of this as the inversion. So I like this trade.
You have your hand raised. You're good. You can talk. Do you have something you wanted to say? I see you have your hand raised.
Yes.
Right.
So this was my trade. I admit it wasn't my favorite one. Just in the middle of working, I just identified it on the chart
Mhm.
and just figured that I can be able to use it. Just a quick little trade. So I guess what I saw was I guess the low of where I started that block. It's right here at 12:30, right after 12:30. I saw that was a low, and then the high was that kind of like New York lunch area, and I saw that it purged. I saw that it purged it around 2:30 to kind of confirm that it broke those lows right at the 12:30 because that's the low that took out the high of 12:15. So that's kind of my thought process of that's the low that kind of took out the high of that 12:15. So if it broke below it, that would kind of be. I mean, it's not the best execution, considering that yes, it did take a really long time. And you typically want to see displacement, you want to see gaps, you want to see something along that nature. But I just saw that it was pretty quick to see that it was taking out those lows and then used as an inverse breaker block.
Yeah.
That's
I
when
totally
I
put
entered
that past me. No, I mean, and that makes sense now. I totally, that went right past my head of the inverse. And no, it makes sense, right? You have relative equal lows internally in here. Price takes them, and then it's never bad. Patience never hurts, right? It's never gonna hurt you in this market. So being patient is always a good thing. And I don't know if you saw it or not, but what Henry even said, I can't annotate Henry, so if you put that other breaker in here, right? There's
right.
really
You have even a
breaker.
smaller one inside there.
Yeah, so you've got you've got your bearish breaker being inverted, and inside of that you actually have a bullish breaker.
Correct.
So yeah, no, I think it's great. I think it's good, right? You shot for 4 to 5 handles, you got 4 to 5 handles, got out, right? Took those relative
And
equal highs.
I guess question just for next time. I want to make sure I'm as transparent as possible. How do I show like trade executions?
So you can toggle them on. You can if you go into here. So I'll show you. I'll go into trading view just to show you. So if you go into settings right here, okay, it's sharing. So you go to settings in here. You can just click when you toggle executions on and off these arrows.
I'm sorry, where was the settings button?
And the gearbox up here.
Oh, okay, got it. Perfect.
If you click that and you just go into trading right here and you just toggle on these executions on and off. That's
excellent.
Yeah, it helps us at least gauge a little bit. It's weird how just adding the simple little executions, we can really understand kind of your thought process on it. But no, I think it's a great trade. I mean, even just the patience, right? That's a very low resistance liquidity run into these New York highs. I like the idea of the New York highs rather than the New York lows, just because of how relative equal these are, right? Yeah, I think it's a great trade. I think it's definitely it's a unique model for sure. I don't even someone who uses breakers a lot. I never really try to use breakers in an inversion type way. So I think that's cool. I'm actually kind of do my own little back testing on the end to see kind of
okay.
how that works out. But great trade.
Thank you.
Okay.
Henry, you want this one or you want me to keep doing that?
You got it.
All right.
Oh, this must be yeah. This must be Axel's trade. Same we took the same trade earlier.
Yeah, that's why they took the same exact trade. You know, entering in this area right here, right? BISI institutional order flow entry drill. Breaker block, the whole ordeal. They had everything in their mother on this trade. Obviously aiming for Tuesday's highs and some buy side liquidity highs a little bit before that, alongside the new week opening gap. Number one, price trades down, creating a 930 Judas, taking a low from the 15-minute time frame, right here. The Judas swing respects the 75% line on an hourly candle wick. Further buy side confluence, right here, right? He's got levels on a 1 hour. IDR low made at 10:20 a.m. right? Relative equal lows. We take it. That's where you got SMT with ES. Price trades below overlapping new day opening gaps and back above, using it as support, right? Boom. Now he's talking about this. Breaks back through it. Institutional order flow entry drill plus breaker entry with a market structure shift on a 1 minute right here. Target daily high and terminus on Tuesday with possible continuation for the new week opening gap, right? Very familiar price action to us because Henry, you just talked about it. And you can see he actually executed on MetaTrader here, right? So you can see the executions. Notice how he didn't have to necessarily play the entire thing, right? The only thing I would say next time is take a partial internally, right? You had it looks like you got right around that rejection block, which is great. If this is your volume, try to hold one more for the full thing, right? Test yourself a little bit. I think that that's something that you can just, it's like you can work on that over time. You know, it's never gonna hurt. Like trades like this never hurt, but in a simulated process, see if and how that works out for you. In the grand scheme of things, of just holding something a little bit longer or taking a partial. But overall, I think that's great. Will you read this for a second, Henry? I have getting a call. 1 second.
Just a quick analysis of what was mentioned in our weekly submission. France press trade on TradingView and then didn't want to have a bad entry when I realized 2 minutes later. That being said, still use the analysis on my current prop firm challenge. A couple things to keep in mind about the entry and exit. The entry on MT5 looks delayed because they have about a little bit of slippage on NASDAQ. TFT, because I guess that's your funded program. So even though I entered at the point where we tapped the BISI in question, it still entered me higher. Even though the possible terminus was at Tuesday's high, my psychology going in was that I wanted to get in and get out the clean swift trade and be done for the week. That's only holding for a clean clear of the daily range. Was content with the idea at 2% gains is enough. The reason why it looks like my exit was premature in T5 is because NASDAQ and US 100 trade differently. After I made my entry, I proceeded to manage the trade on TradingView. Yeah, so this is all good. No worries about the changing platforms there. It's okay. I'm glad you were still able to share the trade with us, and it was a great trade. As I finish running this price trade into the new opening tab CE. Yeah, great. So that's something to
it's almost like you knew I was going to say something about holding it, and then just you turn around and answer me in your journal. So that's great. Good stuff. Good stuff.
Well done. Good trade, Axel.
Well done, Axel. So it's funny. This is actually where I was trading ES. And I took the same trade too, a little bit higher though. I was kind of a little bit more inside of it. But if you can remember, it was my second losing trade where I was going to use it as inversion. So I took this loss too, just in a different scheme of things. Trading my model, which is the 10 a.m. silver bullet, I feel good about this trade because there was buy side liquidity swept, traded 3 contracts, but reduced my risk to 0.5%. My entry is 45.12 3/4 with stop loss at 45.17. Duration of the trade 4 minutes. My draw on liquidity is Friday's low, sell side liquidity. Yeah, so I mean, really, I would say the biggest thing about that, and I kind of had already kind of referenced it earlier when I was talking about ES, because I'll go over here because this is, I was kind of in the same area looking at this, and got stopped out, right? I took kind of the exact same loss as you. This is where higher time frames are really key though, because if you go in on like a 15-minute, and I'm going to take executions away for a second. Right. When we had traded down and back up into this area, if you look on a 15-minute time frame and you basically grab a fib, right? Notice how we respected the 25% of that wick. That this is the key player. So when price is coming off that, right? And you have to look at this though too. And this was also another reason why I found myself a little foolish for selling, was even if I just clear all this, right? Relative equal lows, take it, right? The liquidity on the sell side was taken prior to 9 o'clock, right? That happened at 8:30. That was CPI, right? Then it just does all this back and forth thrashing, and really all this was just a retracement into discount, right? Price just trades into discount. So that's where you can get hurt, and that's where I got hurt too, where when price is coming off this discount, you're viewing this potentially as a shift in market structure, when in reality it's just liquidity, right? It's just liquidity. Price now that it has its established range from CPI low up into the high it made, retraces down into that discount and then goes higher. So I would say just the thing that could potentially help you on this is understanding, fibbing it from the low to the high, understanding when and where you're trading from discount into premium, right? It's it's a lot harder to take this trade with confidence when you're just coming out off of when sell side had already been taken, right? Your draw on liquidity was Friday's low, sell side liquidity at 44.9175. But if you look at all these relative equal lows right here at like 4,500, 4,505, in between there, the CPI had taken it out, right? So keep that in mind. Then, you know, even though it looks like buy side had already been taken, those tend to actually be kind of the structure shifts. So something to just think about, something to try to identify. It's not easy to do. Like I said, I took the loss too. So, you know, it's one of those things where I would have loved to see that not be your only trade this week. I would have loved to see, another trade risked at 0.25% to see what you did. But I also respect just taking the loss and utilizing it as is. But there's always next week. There's always another trade. It's just another trade, and that's going back into what Henry said and what Michael talks about. Building a drawdown recovery plan, something to get you out of that heat and not have it be all in one day, 1 week, whatever the case is. But it's okay. Just keep working at it. More information's better. If it's like we tell you guys, executions, they help us. Understanding where your executions are in here. Right, go up to this gear, toggle on those executions under the trading category, and let us know, what candle you're getting on and when you're getting out, and don't be scared to continuously get and like you take a loss, don't get right back in, but give yourself more evidence, time, data, explanation before you go into your next trade. But don't be hesitant to take another trade, right? Like I took 2 back-to-back trades. They both lost, but I was still engaged in the market. I was still very, very much so dialed in, trying to understand price action. It wasn't just, I lost, I'm done. I'm done for the day. Like maybe if you're not at a mature level where you can just watch or trade the charts and you can't watch them, that's fine. I get it. I totally get it. But if you can remain level-headed, like try to understand what's going on. Don't give up. Try to figure out what's going on. Whether you trade or you don't trade, try at least give it till the end of the session, right? Try to give it till the end of the session to really understand what potentially could happen and how you might be able to capitalize on it. I don't know why. Okay. Yeah. All right. Henry, do you want to pull up the task for this week? If not, I have it.
Yeah. What up here?
All right.
Okay, so task 6. This one is going to be basically the same as last week's task. So utilizing your personal model that you outlined in the previous week. But the focus this week is that it's an FOMC week, and we want to see how you manage that. The whole week is open to you to decide when and where you trade, but be responsible with that. The idea behind that task is to see how you manage your FOMC news week. You're going to trade the same model you outlined in last week's task. So show what your favorite model is, as well as your trading style and management. Utilize any PD array you'd like for entry. Please write an outline of your trading model on the screenshot or in your journal submission. Make sure to include if you're trading with a high time frame bias, what time frame you're trading, what PD arrays you're looking for, what you're targeting, etc. And keep the same balance that you finished with after last week's trading exercise. Okay, it's up to you to calculate your contract and lot size. So everything's the same as last week. The real goal in this week is recognizing that it's an FOMC week, and then how is that going to shape your trading this week? So as we have here in goals, any day is open for trading. This is FOMC week. Think about how that will likely play out using the power of 3 concept and a midweek profile, right? So we have accumulation, manipulation, and then distribution. And think about in a news week, on the days where you have news versus have no news, how is that going to play into when you're likely to have accumulation or manipulation or distribution, right? So think about those ideas and utilize that when you're deciding which day you want to trade on. Only other rule here is do not trade ahead of or into the news release. So don't have a trade on when FOMC news comes out. All other days and times are available to you. So there's a 2 trade max on the week. If you're currently in profit on your account, you can risk 0.5%. And if you're currently in drawdown, risk 0.25%. If you win your first trade, stop for the week. And if you go break even or lose your first trade, you can risk 0.25% on your second trade. Hold for a specific liquidity pool or inefficiency. Look for that 4-hour or 1 hour preferably. And then you can do your risk. The number of handles or pips or whatever is up to you. Just shoot for these at the minimum. So at least 5 handles on yes, 20 handles on NASDAQ with 10 pips and forwards. And make sure that you're operating at least a 1-1 risk reward model, right? So we're not risking 10 handles to try and make 5, but you can risk 10 to make 10. That's fine. Partials are welcome, break evens welcome. So manage a trade however fits your style, however you like. And then just in your journal, make sure to submit the outline of your model, and then also journal what day or days that you traded and why you selected that day. So how did that make sense to trade that day or those days, given the FOMC conditions? All right, does that make sense? Any questions? And with your submissions, you can just reply to this week's Zoom email that you received in your inbox. Send your submissions there.
All good there?
Any questions? I hope it all makes sense. If you do have any questions afterward, feel free to send Carson Knight an email and we can clear it up.
Alrighty, guys. So just an update on everything on the back end.
Oh, hold up, Carson.
Oh.
Chengiz, go ahead.
Yep, go ahead.
Hey guys, I just had a quick question. Just before, I guess you guys wanted to talk about something else, but just outside topic. ICT's space just yesterday, he was outlining basically drawing liquidity as long as it purges it and drops down into displacement and then trade that fair value gap. I guess if you can, just quickly just go over that, on a chart, if you can, of course.
Yeah.
I haven't listened in. Did you listen to that space, Carson? I haven't listened into that one yet. I was gonna listen to it today. Is it regarding the 2022 model?
It's just in regards to any 5-minute, 15-minute, or hour candle. I just wanted to, I guess, see it in chart, I guess, from your guys' analysis. But I'm pretty sure.
Like the hourly expansion or something like that?
Yeah, so basically there's going to be a buy side liquidity or sell side liquidity on an hour, 15-minute, just some form of high time frame. And then once you see price kind of tackle it and drop back down, it'll create a displacement. What you want to do is just wait until it goes back into that. Let's say, for instance, buy side liquidity, purges it, displaces down. You want to trade that displacement, that SIBI. I just wanted to see it in chart.
Yeah,
with
so
your guys' analysis.
that sounds like it's just referring to how you kind of move across different time frames. Like if you're looking to trade a 5-minute model, you'd likely look for liquidity on the hourly chart where you can see a purge of that. Let me just go into I think I can find an example here. Yeah, something like this. So I'll look at this for example. And we may or may not see a model occurring here, but we'll take a look. Am I still screen sharing? Can you see this?
Yep.
So buy side liquidity here at these highs were on an hourly chart, reaching up into there at 1 p.m., tagging that, and then leaving sell side liquidity resting down here. So you're tapping into that, and then we'll be looking for a displacement away from it on a lower time frame, and then targeting the opposite end of the range with liquidity that we see there. So here we're trading into it. This isn't the clearest example, but we're trading away, displacing lower, and then leaving fair value out right here. It's pretty small, but there's one there. Trading back into it. We also have a breaker. And then trading down into sell side. Let me see if I can find another one for you. It's a little bit clearer. So buy side, trading through right there. And then looking for that displacement down toward the sell side. Yeah, there you go. So buy side's ran right there. You're getting that displacement and you're shifting market structure under this low. And then you're left with yeah. So you're entering short.
Great example.
Here. Or you'd want to get your immediate entry, so you'd be entering here. If you're willing to wait a little bit longer, you can see that entering in the consequent encroachment near the high. So somewhere inside of here, you're taking stop at least here, if not up here. And then you're targeting this low. That we're talking about.
Thank you for that, Henry. Appreciate that.
Yeah, sure.
And also, Henry, I wanted to point out to the question he asked, because I listened to that space. ICT's son, he's trading that same model, but on a smaller fractal. So he targets 15-minute liquidity, and he trades the silver bullet on a 30-second chart. So even sometimes when you get the morning session a little bit choppy, when you don't get the silver bullet on the 1 minute, he teaches his son to get it on the 30 seconds. And he said, like, he risks 12 handles to make 10. But yeah, it's the same exact model that you just outlined, but just on a smaller fractal.
Yeah, that's great. Yeah, this is everything's fractal, so you'll be able to see this on any time frame. There's, I forget what it is. I might have the image of it. There's a great breakdown of how you'd want to look across time frames to kind of see this model. Let's see if I can find it real quick. I know it's like if you're looking at 1 hour liquidity, then you can trade the 5 minute. I can't find it, but if you're looking at 15-minute, then you look at a 4 hour chart. Hourly, then you look at a daily, and so on. So kind of just working your way up. But yeah, I mean, this is a great model. I feel like it's one that's pretty easy to learn to see over time, right? Because it just has those 3 steps: purging liquidity, a shift in market structure, and then return back into a gap. I like it. It's good to see everyone kind of trading in their own way too. Everyone, you know, has different personalities. What suits them better. The 30-second chart can be challenging to trade on because you got to make decisions very quickly. But that's cool to see that it can be done in different ways. Oh, Sufin posted it in the chat here. So 30-second chart for 15-minute POI, 1 minute execution. Yeah, or you could have 5-minute execution hourly, 15-minute for 4 hour. Yeah. Awesome.
Cool. Alrighty, any other questions before I start chatting on just the community side of things?
I just send the image that Michael's updated to his Twitter account. I think he mentioned during the space that it wasn't the 2022 model. It was like a different thing because 2022 model tries to catch a reversal, right? But he mentioned something like this model works for continuation as well. So
yeah, absolutely. You can find it intraday for continuation, just using internal liquidity instead. So I might be able to find a quick example of that too. Yeah, there's another one. So I'll remove these because that wasn't established yet, but here we'll just look at all of this price action here. So where's 930? Right, here's your 930 open. We're making this run up higher, back up towards this rejection mark here, dropping down into sell side, and then using somewhat relatively equal lows down here. There's your sell side. Not quite reaching to it there. Returning back up into this range. You can see here we're encouraging the high as we get into 2 p.m., which is another time where we can often see reversals. But we're still inside this internal. We're looking for internal liquidity because we're still inside this range, right? So you have your high down to your low. That's your dealing range. We're trading back up into a premium. We're trading above this bold swing high right here, purging liquidity, shifting market structure under this low, and then turning into a gap. Sell here, exit here. Stop above here.
yeah, that's great.
Very good.
That's all good stuff. Yeah, with regards to the community, guys, we still are working on some stuff. This past week, we were able to get people on the platform and get their feedback, have them use it in a couple different areas, and that just kind of brought a lot of, it's one of those things where once you think you've got it all done, you start putting people in it, and you figure out you got to tweak this, you got to tweak that, you got to tweak this, you got to tweak that. So we really wanted to try to get it out to you guys this week, or like this weekend that we're in right now. Unfortunately, it's just not quite done yet. We had a couple things that we needed to go fix and tweak, but it is very close to getting done. Hopefully, by the end of this week, we'll have something kind of to give to everyone. I want to thank anyone who's already in the platform for beta testing and all the feedback you've given us. You guys have allowed me and Henry to, do what that was supposed to do, right? We wanted to get certain individuals in there so we could sit there and really get some good feedback on what we might need to change, what works and what doesn't, both technically on the platform, but then also areas that you might not use more or less than other areas. So we are putting a lot of time and thought into this. So fingers crossed by potentially next weekend we'll have something to share. We are working on it day by day. So appreciate you guys for the patience. Appreciate the ones that are already in there for all your feedback. And it's close. Other than that, that's really all I have. Henry, you have anything?
That's it for me. Yeah, excited to get things launched. Hopefully we'll be able to have it available to everyone in the next week or two. There's just a couple bugs and stuff that we have to work out, and we want to make sure it's operating well for everybody when we get you on there. just working smoothly and all. So should be very soon, and we're excited. Yeah. So
Yes, we are.
otherwise, trade safe this week. Excited to see your submissions on the exercise. Be careful, it's a FOMC week, so keep that in mind.
Yep.
So
All right,
I'm gonna
guys.
trade ahead of the news, and yeah, stay safe. Talk to you soon.
Enjoy your Sunday. Enjoy the rest of your weekend. And I will talk to you guys soon. You'll probably hear from us on Wednesday. Trade safe until then. Talk to you later.
Thank you guys.
Thank you.
Yeah.